Hi, welcome to another episode of Real Estate Straight Talk. Your host, Carla Olivares with eXp Realty, Broker Associate, and my guest today is Bill Anderson with Guaranteed Rate. He's a mortgage lender, a mortgage broker, and he will tell us a little bit about himself, about what he does, and also tell us a little bit about the market and what's going on, with interest rates today. So I'll give him the time. So hi and welcome, Bill. It's
Thank
so
you,
nice to
Carla, for
see
having
you.
me.
Of course. Well, if you would like to tell us a little bit about you and your company.
Sure. So I'm Bill Anderson. I'm a vice president of mortgage lending here at Guaranteed Rate. I live in Fort Lauderdale and serve the Florida market. I'm also licensed in Connecticut and can help buyers in that market as well. And then my team is licensed across the country. So if you're looking to buy in another location, I know that Carla does business up in New Jersey. I have team members that can help with purchases and refinances in that market as well.
Excellent.
I have been with Guaranteed Rate for 3 years. We were founded in 2000. And like I said, we have offices across the country. We are one of the top lenders in the nation. And we're known for our technology. We can do application all the way through closing, all based on no human contact. It can be as much human interaction that you want, but we have the ability to do an online application, upload your documents, give you the approval that way, and even close with an e-notary. So you will have a Zoom meeting like this, and you'll meet with somebody and sign all your documents electronically.
Okay. Excellent.
And because of that, we're able to close loans really quickly within 20 days.
Wow. Okay, that sounds good. Excellent. Now, are you a mortgage lender or a mortgage broker as well?
So yeah, I am a broker. At Guaranteed Rate, we have a lot of in-house programs so that I'm able to serve the needs of most of my clients as a lender here at Guaranteed Rate. But if someone has a bankruptcy or maybe a non-wardable condo, which is a condo that doesn't meet the conventional underwriting guidelines, there might be, liens from the city or town on the property. It might be a new condo that hasn't been established yet that's being built. And for those situations, I work with a number of different lenders that I can get that deal done for you.
Very good. Why don't you tell us a little bit of the state of the market with interest rates going up and going on the rise, and what can we expect for the next, quarter of, the rest of the year?
Sure. So there's been a lot of talk in the news about interest rates going up and the housing market, maybe crashing. So what's happening is you've all heard about inflation, and as inflation happens, prices are increasing. That's what happened to the housing market.
Mm-hmm.
Housing prices went up because there weren't enough houses and the demand was so great. People were able to work remotely as a result of COVID. So people were moving to bigger places or to other destinations. Their house was too small, to work from home. So they wanted a bigger house, or, they might have been up north and wanted to move down to Florida where the weather's nice. And when that happens, the demand increased. And at that same time, people weren't putting houses on the market. And that's what caused the prices to increase. What's happening now is the Fed is trying to control interest rates and control inflation. And by controlling inflation, what they're doing is increasing the Fed funds rate. There's a meeting this afternoon. They're expected that the Fed will increase that federal funds rate by another 75 basis points. That Fed funds rate is the overnight rate.
Excuse me if I interrupt, but what does it mean to a buyer, that increase?
Sure, sure. When the Fed increases that rate is what banks charge each other for overnight funds. It impacts the prime rate, which is what credit cards are based on. Car loans are based on that, so you might see increases in there. It doesn't directly impact the mortgage interest rate. The mortgage interest rate is more based on inflation. So what the Fed is doing is trying to control inflation, and the mortgage interest rates kind of respond to what's happening in the market. They've been going up because there's been volatility in the market. There's been decreases in the stock market. Rising the Fed funds rate is trying to control that inflation, get a grip on the economy. And so I think that we'll continue to see some increases in mortgage rates over the next couple of months. But as the Fed gets control of that inflation, we'll start to see interest rates for mortgages go down. They're in the 6% range now, but I think after the first of the year, we'll see them more in that 5% range.
Okay.
Well, with them being in the 6% range, what that means to the buyer is for every $100,000 that you borrow, it's going to cost you about $630 in principal and interest on a monthly basis.
Okay. Yeah.
Rates are still relatively inexpensive right now. Even though they're in the 6% range, they're higher than they were last year, in the 3.5% range. But there's still that ability to purchase homes.
Okay. Well, I don't know if there's anything else. I mean, we definitely see a little bit of a shift on, the market itself here in the local area of Florida. Specifically, we look at Miami, the high-end prices seem to be having a little bit of a fluctuation or price adjustments that we're seeing daily, coming down a little bit. So, I mean, that's telling us somewhere anywhere between 1% to 20% in some cases. So, I guess that's a little bit of an update there, and just to keep an eye.
Right.
Yeah, and if you're interested in buying or selling, I mean, this is still a great time to do.
Right. And, people are saying, well, prices are coming down, so there must be, the housing market's going to crash or something like that. But you probably see this too, Carla, when you're talking about those decreases. I think there was a period of time when, houses were priced, and then there were so many bids and outbidding people, and they were going for higher than that purchase price. I think that those realtors that were listing properties may have still had that momentum and were listing prices at that price, and now they're seeing an adjustment, getting back to more of a normalized housing market price. So, and there's definitely still a demand because there aren't enough houses for people that want to purchase them.
Yeah, definitely. I think that we are moving to a more normal market,
right?
And I think that is healthier.
Yeah.
So, and there's still high demand for housing. So, buying or even renting. So, I guess that we're anyone that wants to sell their home, they're still very well positioned to do so.
Yeah. And homeowners have built up equity in their properties because the values have increased. So now is a good time to buy. It's also a good time to sell and get some of that equity that you've built up out of it.
Yep, correct. All right. Well, thank you very much, Bill, for your time and for this segment. And I guess we'll see you again until next
time. All right. I appreciate that.
Yeah. And please let them know how they can reach you. I'm going to put your website and your phone number below the video. But if you want to just please give your phone number.
If you're interested in having a conversation with me about what's happening in the market, how much you can afford on a purchase, I'd love to speak with you. Again, I'm Bill Anderson from Guaranteed Rate. the best way to get me is my cell phone number, which is 860-465-7556. I'm based in Fort Lauderdale and look forward to speaking with you.
And your website?
My website is rate.com/Bill Anderson, all one word.
Perfect. All right. Well, until next time, your broker associate for all your real estate needs, Carla Olivares, 754-777-3988. Thanks. Have a great day. Bye.